Very good. To begin with, I'd like to remind you last week you should have received a red alert from NAR in regards to NFIP, your NFIAP, your flood hazard insurance, and that all you need to do is to click on take action. Go back to your emails if you haven't filled it out. It will take, by clicking that red button, it'll take you to your representative. Mine is Representative Adam Schiff, and the message would automatically be transmitted to him to continue and expand and renew the flood hazard insurance, because this is something that will be affecting thousands of properties and thousands of communities across the nation. So it's important that you respond to this red alert as soon as possible. All right, so let's start with our today's presentation. We are going to be talking about cannabis, not as a morning buzz, but with some information that you may find interesting. We'll be sharing some charts with you, really very quickly, that would provide some additional information about different issues that are important to us as realtors. And we are going to be talking about a couple of cases, one in front of the Supreme Court of our nation, the other one potentially going in front of the California Supreme Court, being brought by the legislators and Governor Newsom. So let's start with the cannabis issue. Uh, Senate Bill 2860 is going to be creating a safe harbor. As you know, cannabis has been a cash business only, even though California, back in 2019, under SB or Senate Bill 51, approved what was called a limited charter banking. So cannabis businesses can deposit their earnings just like any other business does in banking. But this is nationwide. And the reason for that was because in 47 states, right now, cannabis is legalized, but it is still considered nationally as a Schedule One controlled substance, which means most banks, maybe not so many in California, are prohibited from taking deposits from cannabis businesses. So what does this have to do with real estate, right? We have a lot of people in California that either lease storefronts to cannabis related businesses and or sell properties to cannabis related businesses. And this is a big deal because as a realtor, when you're depositing the money or the commission and or the brokerage fee that you make from a transaction involving cannabis, now it's totally legal to do that. So I thought I'll share that with you. NAR, by the way, is totally on the same page, and they will be supporting this endeavor and this bill, SB Senate Bill 2860, for the reasons that I just shared with you. So now let's go to some charts. This is a chart that was provided by Wall Street Journal, and it's interesting because it shows where in the nation prices are increasing and where in the nation prices are decreasing. This is residential prices, residential home prices, and so forth. Los Angeles, as you follow my cursor, is has dropped somewhere between about 5.5% in valuation in the past year. For example, San Francisco was at 10.5%, San Jose at 10.5%, Seattle at 7.5%. Buffalo went up by 8.3%. I just thought this chart will provide you, or Orlando and Miami in that case, right? 12%, 9.3% increase in values. This chart will provide a national perspective for you on what is happening with prices in with the names and where the locations are. Los Angeles asking rents have started to decline. In fact, City of Glendale rents are up only by 0.1% from last month. And in comparison, from 2019 to today, Glendale rents have gone up by about maybe 15%, which, if you take an average, you're at about 4 or 5% per year. Keep in mind that most of the time, the inflation, especially in 2021 and 2020, 2021, went up to about 9.5%. But there is relief inside as far as rents dropping as at least per square foot, according to CoStar data that we use all the time. Let's talk about some of the issues and that is causing housing prices to be really out of reach of a lot of people. Back in 2019, the average housing cost was about 30% of the median income and or the household income. Today, it is at about 40%. And this, by the way, is not just because we have a shortage of housing, even though that is the main reason. California, we've shared with you, needs about 180,000 to 200,000 units per year. And the only time that they were able to achieve that was back in 1980s. And since then, we've been at 100, 110,000, hence rents going up, hence cost of housing going up and what have you. See, one of the problems is, even though, again, as I said, shortage of housing is the main culprit, but you look at the increase in median income versus median price in Los Angeles County, you will see how the median income has risen, not by as much as the median household value, 92,000 versus 805,000. Now, the only reason I'm bringing this up is so for your consideration, so you know there are other factors at work, and perhaps, and by the way, the one sure way of increasing median income is increasing the productivity level of labor in the United States. And unfortunately, we have failed miserably in that. Technology, when it came up, back in 2015, it was supposed to have increased the productivity of labor by leaps and bounds, and it hasn't done so. And the chart is this chart is a testimony to that, because if that was increasing, the productivity of labor was increasing, the income would have increased as well. We are going to be talking about a couple of cases. One is in front of the Supreme Court. The nation, of course, U.S. Supreme Court, has decided to take a case that deals with or has to do with impact fees, right? Whether it's park impact fees, whether it's traffic impact fees, whether it is school impact fees, and what have you. The case really is about a person that in El Dorado County, in Placerville, that was forced to pay $23,000 in impact fees, even though the county did not have the nexus, the study that shows, hey, this $23,000 is you're being charged is because our school fees are going to go up, our traffic congestion is going to go up, and we need mitigation measures in order to bring them down again. So when this guy Sheets goes out and pays for it and then sues the county, and the Supreme Court decides to take it, even though the state courts had ruled in favor of the county, and even though the county did not have the nexus one or the connection to impact fees. Why is that important? Because according to, and what does that have to do with Glendale? Because according to Christopher Ellendrov, UC Davis law professor, pretty famous, by the way, this would have an effect if the Supreme Court decides in favor of sheets, this would have an effect on inclusionary zoning. So what does that have to do with us? Back in 2000 and I want to say 17, 2016, the city of Glendale adopted the inclusionary zoning, and by actually mandating that if you're building a building, a certain percentage of the units have to be affordable, and what have you. And of course, there's a formula about that. We're not going to go through it, but I just wanted to give you a general understanding of what that is, what this is, and how it would affect, for example, the city like Glendale. And the other way that it could affect Glendale. Now, this is not about the money that Sheets was charged, more so than it is about whether there was a nexus, that whether there was a connection between collecting those impact fees and the development of a single family home, right? So Glendale adopted all of that, the impact fees. And I remember this association in stride had to negotiate with the city management and negotiate with the city council back in 2013, 2014 to bring down those impact fees. I'm sorry, 2007, 2008, to bring down those impact fees because we were in the midst of a recession. So we've been involved with all kinds of this kinds of stuff on local level, making sure that development continues its natural progression, if not increasing it, because that's what it needs as the first reason in order to be able to reduce rents and also provide affordability to folks that are looking for it. So that was the first case. The second case has to do with Gardner Newsom and the legislators that are asking to take the Supreme Court of the state of California to take up a case in order to take off of the ballot in 2024 the CBRT, or the California Business Roundtable Initiative. And very short, to summarize it, this initiative, by the way, has qualified, will be on the ballot in 2024, and the purpose of it is to protect Proposition 13. This initiative states that, look, you as legislators can go ahead and increase taxes, property taxes, special taxes, and even general taxes, right? However, the voters have the final say. That needs to be put in front of the voters, and the voters have to decide whether or not they agree with that. And that threshold should be at 75% of the voters count, so to say, right? So the governor decides with the legislators that this is not fair, and therefore is asking the Supreme Court, or petitioning the Supreme Court of California to boot this initiative off of the ballot. Now, it's important for you to know that the court rarely does such a thing. They wait until such time that the voters vote. But there is precedent that, for example, the counties up north that wanted to separate from the state of California, the Supreme Court rejected that initiative to be going on the ballot years past, and they're using the same argument here as well. Under the current law, again, the legislators have to pass a tax increase by 2/3, and California voters would approve the increase before it takes an effect. Keep in mind that ACA 13 was an affront to the same initiative as well. In other words, ACA 13 was telling or sending out a message once it was adopted and will go on the November ballot that, look, CBRT, if you want 75%, if you want the taxes to be approved by 75%, guess what? You have to get 75% of the voters to approve with your initiative as well. And we know for a fact that years ago there was a ruling from the Supreme Court of the state of California that all you need is simple majority. But this is another way, legislatively and legally now, to affront the CBRT ballot initiative. And the source for this was, by the way, San Francisco Chronicle that we use. Madam President, that concludes my presentation. And with that, I'll be happy to answer any questions if there are any.
Thank you, Greg. Really appreciate it. So Governor Newsom is suggesting that the I don't know what the word is for it, but the initiative by the CBRT to be taken off the ballot in 2024, right?
Correct.
Okay. So he's pushing for a simple majority vote for additional taxes.
Now, what he's saying is basically it's off the ballot, and that's it. He doesn't say how the vote should be or not be. That was the legislators' um, ACA 13 that says, look, you need to have 75% if you want to qualify an initiative, and if the voters vote, it should be by 75% of the voters if it has to do with decreasing taxes, right? Decreasing taxes or keeping the status quo. The purpose behind the CBRT is to fortify Prop 218, Prop 13, right? To make sure that everybody is on the same page. That look, it's not only up to the legislators to tax people, even though constitutionally they would, but then the voters have to approve that increase in taxes or decrease in the protections that Prop 13 affords us.
But one thing that was hopeful about CBRT being on the ballot is that if it passed, it would negate the Measure ULA in LA, which would have been great. And now they're saying take it off the table. So anyway, very interesting.
My own opinion is that was an overreach on their part to go back and make it retroactive in some cases, but who knows? Again, I end my presentation with the slide in front of you, folks. You need to be able to be an evangelist, an advocate for our association to collect RAF or contribute to have your colleagues contribute to RAF. RAF pays for our good fight on issues like this on statewide basis and also on local basis. Let me give you one simple example. This is something that happened real time over the weekend. On Saturday morning, Madam President, I got a call from the Government Affairs Director for Ventura Coastal Realtor Association that Point Hueneme was considering a rent registry. And of course, we know, and you know, that we have gathered national acclaims for defeating the rent registry. In fact, we're the only municipality up until today that has defeated the rent registry in LA County, if not the state of California. So I had to spend some time with the GAD and provide him the information and inform him of how we were able to defeat the registry. And they made a presentation in front of the city council, and the city council opted out for education as opposed to rental rights programs or a rent registry. But that's the kind of work that gets done all around us. And this is why RAF is so important, and that we will continue asking for you to ask your colleagues to loosen up the purse strings and give the 20, 30, 40, 1,000, whatever it is, but do participate, because without that, it becomes very, very difficult for us to continue doing the work that we do. Thank you.
Greg, I have a question. So I'm a little, can you hear me?
Sure.
I'm confused. So the impact, how does that affect the Proposition 13? Is that gonna overlap it, or how does it work?
Are you referring to ACA 13?
Yeah.
Okay. The way that it works is, let me use an analogy. You've heard that once the camel nose gets into the tent, the entire body follows. And this is what that is. People, including California Association of Realtors, apartment building owners associations, business roundtables, and so forth, and many organizations are afraid that, and if ACA 13 passes, then it's going to be easy for the legislators, right? And you have a supermajority right now in California. It will be easy for them to start poking Prop 13 protections that are offered to homeowners. That's the idea. Not that it's going to do it right now, but it will open up the gates, right? And by the way, this should not be a surprise to you. For years, the legislators in the state of California have tried to weaken Prop 13 and or totally eliminate it. And I will go out on the limb to say that that will continue.
Thank you. Greg, are there any other questions?
Now, I see on the chat that Madam President, that Ira Bland had asked me to give him give you, all of you, a brief summary of what happened with Laura Friedman's meeting last night that had the tenancy union, Burbank Association of Realtors, Glendale Housing Department representatives, Burbank Housing Department representatives. All of these were there. There were about 200 people who attended that meeting. Of course, I was one of them. And it was really an education for the folks about the different cities and how they approach the rental rights program. Keep in mind, City of Burbank is going to be discussing rent control in Burbank. And of course, we have lended our helping hand to the GAD at Burbank, to the association at Burbank, to the extent we could, because we fought this stuff starting 2017, 2018. Madam President, you remember staying up till about 1 o'clock in the morning to be able to speak in front of the city council, and I remember it very clearly. So, having said that, that's what the last night's meeting was all about. It was not confrontational. There were a bunch of questions that were being asked either by tenants, mostly by tenants, and the resources that are available to them, and what have you. So that's the brief background that I can give on last night's meeting.
Is that meeting recorded? Can we watch it online?
Sure. You go to Laura Friedman's Facebook and or the website, and there's a recordation of that meeting.
Okay. Thank you so much.
All right. Well, I don't see any hands up, so thank you again, Greg. Appreciate the update. All right, so let's get